This is the worst thing you can hear, as we know that our society is transitioning towards a cashless society and rolling out central bank digital currency, a CBDC.
You missing money too? There you go. So this is not something that's just one person. This is everybody's happening to them. And this is crazy. This is very crazy. Yes, Bank of America decided to take people's money without their consent. And we're asking what's going on, and they're giving us a runaround. Everybody for the same thing, man. Same thing. Bank of America, and everybody's missing money. I'm also missing money, over $1,300, and they're telling me to call customer service. And they keep hanging up on people. This another person here is also missing money. So we're trying to see what's going on. Money's missing today, and we need our money. And they're already telling us to call customer service, and customer service ain't doing nothing about it. So just a heads up, if anybody's experiencing this, please let us know, because this is not right. I'm missing $1,400 from my account, and they're telling me that there is no way they can help us. This guy's missing money too. This other person is missing money too. And you missing money too? There you go. So this is not something that's just one person. This is everybody's happening to them. And this is crazy. This is very crazy. Yes, Bank of America decided to take people's money without their consent. And we're asking what's going on, and they're giving us a runaround. Everybody for the same thing, man. Same thing.
And the bank tells you that there's nothing that they can do to help you, or at worst case, they tell you there's nothing we can do. This is pretty much par for the course, especially for Bank of America. If you've watched the video I posted just a few days ago about a situation where someone made a deposit into their Bank of America account, it was a $33,000 check that just went missing. And the recurring theme, the repeated statement, not just by one branch, but by multiple locations, was there's nothing we can do. It's almost as if that was in their employee handbook as the standard response for any sort of issue with a customer, their account balance, missing money, or any funds like that. Now, granted, this particular situation, this was uploaded or posted on January 18th, and we're all aware of the problems that Bank of America was having with Zelle. Bank of America saying it was Zelle's problem, Zelle saying it's Bank of America's problem, but at the end of the day, you guys can see here whose problem it really was. It was the account holders. Welcome back to the channel, everybody. I got some important information I want to bring to you guys, and I appreciate you guys joining me yet again. Please give the video a like and subscribe to the channel. It helps out tremendously. Now, folks, why would lenders be preparing for defaults when they know they are too big to fail and bailouts and bail-ins are on deck? Now, we got a lot to talk about today on this video, and how it's going to affect your money, your savings, if you have any, which is a growing concern, and also your income, as there's a lot of changes, a lot of shifts in our economy, the US economy, a global economy, moving towards a cashless society, central bank digital currency, CBDC, cryptocurrency, as well as the jobs market. Let's get right into it. And it says, according to this article here, I'll link it down below so you guys can check it out. Banks and lenders are setting aside funds to cover loan losses out of fear of a recession. It's interesting that they state it as fear of a recession, because technically we were already in a recession last year based on 2 consecutive months of negative GDP, but now we're just splitting hairs. And I want you guys to take a look at this chart here. And it says that you just need to remind everyone the labor market is always strong before a recession. So why is that so important? Well, if you guys watch Jerome Powell, Federal Reserve Chair Jerome Powell, in his latest address, there was talks about non-farm payrolls and employment up 517,000 jobs, which ultimately angered him, pissed him off a little bit, because he said Wall Street wasn't listening. But as you can see here, I'm not trying to be funny, but it says what the amazing jobs added report did not reveal is many of the new jobs were people taking on second jobs as a survival mechanism due to inflation. Also, jobs added does not subtract jobs lost or layoffs. And it says that jobs report shows increase of 517,000 in January, crushing estimates. Now, I don't know about you guys, but I feel as though, based on the comments, which I really do appreciate you guys commenting on my videos and engaging and helping with understanding what's really going on out there, getting to the bottom of this, sharing facts, and real life experiences. But I would say that based on the comments and also based on the YouTube analytics is that a majority of my audience on this channel is of an older age group. And I would be really shocked and surprised to see if nearing retirement age at a point in time where investments, portfolios may not be up to par, savings accounts could be seeing some intense strain and pressure as they're drained with high prices and inflation as we're entering into this recession, that they would be interested or even capable of applying for a job at Jiffy Lube as a oil change technician. I just don't see it happening. And it says here that the hashtag jobs added numbers from January are highly flawed. And this little meme here sums it up pretty well. And you can see this Walmart associate. I can't even say it's a Walmart cashier because there's no such thing anymore. I don't know if you guys saw back, I think it was an article I was reading printed or published in 2020 that said Walmart had a plan and a strategy to eliminate all cashiers. And that was 2020. And it says, the economy is going great. We created 5 million jobs this year. And the Walmart associate wearing a McDonald's hat as well as an Uber Eats hat says, I know, I have 3 of them and I still can't pay my rent. Comment down below, give this video a like if you can relate to that meme there. And that is part of the problem. And it's that, one, mainstream media doesn't necessarily provide all the information and all the facts. And 2, there's some reading between the lines there, and the jobs market isn't quite what they make it seem, okay? As the Wall Street Journal reported Monday on January 30th, Capital One and American Express are among the companies that increased their rainy day funds, an indication they're anticipating an end to an era of high consumer spending and record low unemployment, which is to be expected. Jerome Powell himself said job loss, tightening of balance sheets, pain felt by businesses and families, with experts stating that their expectations, their 2023 predictions for jobs and unemployment is closer to 2 million jobs lost and a 5.5% unemployment rate, far greater than Jerome Powell and his predictions. But as I've told you before, I feel as though they're always understated. So they don't want to cause too much panic, too much fear, much like these banks, folks, with what they're doing, with the games that they're playing with people's money that most people really don't have. Can you imagine having $1,400 missing from your bank account? A lot of people I know don't even have $1,400 in their bank account. So that would put them into the red. That would put them into the negative. And a lot of these people that I know that are in these situations are coming to me asking, how can I improve my situation? How can I mitigate my risk? How can I diversify and secure and produce cash flow? Very important. But it says here, and I think there are certainly a lot of concerns about what may come with the economy and the potential for a recession in 2023, according to Discover Card's chief executive, Roger Hochschild. And this is what he told Wall Street Journal. Listen, but where we sit right now, the consumer is still doing pretty well, supported by a very strong employment market. I don't know if I would use that as a blanket statement and say the consumer is still doing pretty well. But, you know, I guess as long as you're still upright, maybe you're doing pretty well. But I know a lot of people are struggling. I know a lot of people are behind on a lot of their payments. I know a lot of people, it's probably more than you think that don't necessarily speak it or try not to show it on their face and their body language as they're going about their daily lives, just trying to get by. But I think it's a lot more that are not financially prepared. And it says that, however, Hochschild added that increased demand for debt consolidation products could indicate more stress among borrowers. His company's personal loan balances climbed 14% between the fourth quarters of 2021 and 2022. And it says here that he said, we definitely have been tightening our credit standards and we're always looking for pockets of stress. So Tightening credit standards mean it's going to be much more difficult for people to have access to funding and loans and any emergency reprieve to get by in a time of high inflation, perhaps recession and job loss. So pay attention, folks. If you feel like you may need that, you may want to go ahead and pursue it now. Have it, not need it, versus need it and not have it. Because when that time comes, just think, if you were to lose your job and then try to apply for a personal loan, odds are 10 times out of 10, you're going to lose that one. You're going to be denied. And they're looking for pockets of stress. And these pockets of stress, in my opinion, are going to exist in certain neighborhoods. No, not Steph Curry's neighborhood, because Steph Curry has made it very clear he doesn't want that near his neighborhood. Keep that low income housing bull crap out of here. He doesn't want that. He's like, I made too much money to be living here next to these poor people. Get out of here. So, but there are pockets of stress in certain neighborhoods, certain zip codes, certain demographics, certain income brackets. And that's what these banks are looking at. And when your applications come through, they're not being reviewed by people. They're being reviewed by OpenAI, ChatGPT, artificial intelligence, bots. They're being reviewed by algorithms, and they already know who you are before you even submit it based on an IP address. So when they identify a pocket of stress, you're already redlined, you're already flagged. And among those signs of stress, a growing number of higher income Americans, 51%, who say they're living paycheck to paycheck. And I think that 51% is actually low. I think it's probably closer to 65, almost 70% living paycheck to paycheck. And if they're not, they will be soon based on what's coming. Payments wrote Monday that growing shares of consumers across all income levels report spending the bulk of their monthly income on expenses, finding it more difficult to set aside funds for savings. And this is what I was telling you guys about as far as savings being depleted, savings being wiped out. And unfortunately, for the older age group that's worked their entire lives, that were looking forward to a retirement, are getting hit. They're getting stung right now. They're feeling that pain, pressure, the squeeze from this economy, and their savings being wiped out, and ultimately having an impact on their ability to retire, stop working, while also in fear of not working because of mass layoffs and or having to try to pick up multiple jobs, because at an older age, just the ability to try to manage 2 jobs, maybe 3, wear multiple hats, put yourself in a personal safety hazardous, risky situation of rideshare and these food delivery services. It's just not good right now. And at the end of last year, 9.3 million more U.S. consumers were living paycheck to paycheck than at the close of 2021, with 8 million of these consumers earning over $100,000 a year. And this is according to a new reality check, the Paycheck to Paycheck report, and a collaboration between Payments and Lending Club, stating that 8 million of these consumers earning over $100,000 a year were living paycheck to paycheck. And I believe it because I've seen it. I still see it. I know people in that situation now that are working to try to get out of it. I'm not going to say it's too late. It's definitely going to be a little bit more difficult now, but they've realized it, they understand it, and they know that they have to do at least one of 2 things, but they really need to do both. And they have to earn more money, and they have to find ways to spend less. Easier said than done, but it can be done, folks. While some consumers show optimism about 2023, the report found that 27% expect their financial situation to worsen this year, and the reasons being inflation and economic uncertainty, in most cases cited by respective 72% and 66% of consumers, which I put up a video, go check it out. It's on Kevin Prepper, about small businesses going under. 2 out of 3, 65%, 66, 67% of small businesses going under. And that is adding to this expectation of the financial situation worsening this year because of inflation and economic uncertainty, as well as other constraints with the supply chain and labor. The labor market struggle is twofold. It's for small businesses, it's really difficult because the demand for the labor is so high in compensation that a lot of these small businesses can't afford it. Then for those looking to gain employment, lacking the skills, the necessary skills to achieve these higher incomes, these higher salaries, these higher base pays. If they don't have the skills, then they're honestly they're left to resemble that meme of the Walmart associate working at McDonald's as well as Uber Eats just to get by and still not be able to afford to pay rent. Folks, this is a growing problem of huge concern. In addition to the banks showing their hand and a future video that I'm working on that I'm going to bring to you guys really soon. So please subscribe and turn on your notifications so you'll be alerted when I drop this video. But we're moving towards a cashless society for a variety of reasons. Much like that clip I showed you at the beginning with Bank of America and the issues of taking money out of the account holders' accounts without their consent. What they want, and this is going to have an impact on the jobs market as well, they want to eliminate all the people from most of these businesses, plain and simple. If they can get rid of people, they want to do it for a variety of reasons. You've watched my videos, you know why. But additionally, as these bank runs and these bail-ins, or actually the bail-ins are going to happen before the bank runs or simultaneously, we'll see how that plays out. But they don't want to have people there. They want to move to this cashless society. They want to move to this digital dollar because then the people have nowhere to go. All they can do is go to this building that has no people in it. It's the Bank of America with no employees. It's just cameras, webcams, and AI, and a card scanner to get in the door. And then you can go online or you can call customer support, and then they can give you the standard Bank of America MO, which is, there's nothing we can do. I'm sorry, but there's nothing we can do. I'm sorry, but they'll actually pick up the phone and you'll say, hello, Bank of America. And they'll say, I'm sorry, but there's nothing we can do. And you're like, but I didn't even tell you what my problem was yet. I'm sorry, but there's nothing we can do. But based on research, based on the trends, based on historic factual data from banks, for instance, like in Denmark, since they've moved to a cashless system, they've seen a decline of 0 bank robberies since, because there's no money there to get. The people have nowhere to go to cause these problems, to express their concerns, to voice their grievances as their accounts are being drained and wiped out. So all this is playing into that, as well as a variety of other things that are potentially, folks, think about this, potentially deviations and distractions. If you watch my video about Walmart and how the Walmart stores are closing because of the arson and fires being set inside the Walmarts as a deviation and a distraction to allow people to then steal and, increase the amounts of theft that's going on in these Walmarts, this is part of it too. So we have to realize that a lot of what mainstream media is putting out there could be a deviation, could be a distraction. You guys, please be smart, be safe, be kind to one another. If you want the truth, you know where to get it. I appreciate you guys watching. I'll see you guys real soon. Take care.